Alright guys, so I just got back from my holiday in Thailand. I went to Bangkok, one of the most beautiful countries in the world, best city. The level of urbanization was insane. And guess what? When I was in my hotel room, I saw the unthinkable on the TV screen. Trump is now threatening countries in the BRICS over the reserve currency. Now I barely put my luggage on the floor and here we have it, the next outbreak of the economic war. And things just can't seem to take a break. And we must talk about this craziness now. The US wants commitment from BRICS not to create an independent currency for the bloc, and of course, to continue using the dollar as a reserve asset and in global trade. And if BRICS doesn't bow down to his orders, Trump will impose a 100% tariff on imports to the US, which basically equates to cutting a country away from the US consumer market. And almost immediately, we kind of know this is a bipolar demand. It doesn't even make sense. This is one big admission that either the dollar is in trouble, the US economy is desperate, or probably both. It's important we explain this simple contradiction. The US cannot reduce their trade deficit and increase the dollar's global dominance at the same time. Trump wants to bring back US manufacturing and increase US exports to the world. But he can't do that if he forces the world to use dollars in global trade. By threatening to tariff BRICS, the US is saying to the majority of the world, you can't sell to US consumers who pay in dollars. And this creates a shortage of the reserve currency flowing into the global economy. Take China for example. Their trade deficit with the US is nearly $300 billion. 100% tax will crush Chinese exports to the US. But it also means less dollars flowing around in global trade. You multiply this by 3 or 4 times across other major economies, now you have a dollar crisis that sends the dollar even higher. Since countries don't have enough of the reserve currency, they can't print dollars. This creates deadly consequences. And once Trump realizes this, he's gonna drop his tariff threat like a hot potato. Now it sounds sensational and very entertaining, but this isn't The Apprentice, it's real life. If countries don't hold enough dollars, they will have to de-dollarize. There's no choice. They will trade in bilateral currencies and use other alternatives. They won't stop trading with each other. The BRICS, the Middle East, and the rest of Asia will start transacting outside the dollar. And it's obvious which currency that will be. It would be the Chinese RMB. Over 50% of China's cross-border trade is in their local currency. And in the first 8 months this year, payments have increased by over 21%. Nearly $6 trillion worth of transactions was done in the Chinese RMB. This is a crazy strategy. If I was a US policymaker, I would be sweating bullets. Punishing BRICS would destroy the dollar even faster. The dollarization is only the tip of the iceberg. The other consequence is just as deadly. And if your investor is definitely going to affect you. If Trump punishes BRICS with trade tariffs, there will be chaos in the stock market. There could be an epic collapse in price, and you must understand why. In goods alone, the US has an incredible trade deficit of $1.3 trillion, and that's in 2022. The US imports a ton of goods from China, Mexico, and Vietnam. The manufacturing base back home is almost non-existent. But because of this, the world earns a ton of dollars from US importers. Well over $1 trillion is flowing out to foreign companies that make the stuff. And what do people do with the dollar earnings? A big part of it comes back to US investments. Investors in China, in Mexico, in Japan, they start stamping up US assets like stocks. As a result, prices they continue to rise. The US deficit is a big reason why for the last few decades the markets have been flying to the moon. So now Trump has to make a very big decision because you obviously can't have both. If he decides to reduce the trade deficit, this will help American workers and US manufacturing. But if he wants to protect the dollar, this would benefit Wall Street and the power of US sanctions. This is the trap the US economy is in. Either US industries are doomed or Wall Street gets clobbered and the market collapses. As we speak, we must understand the trend the US economy is in. The Biden tariffs are already starting to impact what's happening in global trade. In October, the US trade deficit fell by 12% from the prior month. imports have fallen by a whopping 4%. And this is important because if the flow of dollars suddenly dries up, the world could be facing another currency crisis. This isn't good for Trump either. He needs a weaker US dollar for his industrial reforms to work. Bond yields are already extremely volatile and trillions will be needed to bring home manufacturing. And that will mean borrowing a ton of money from the global market. By punishing BRICS, Trump will gradually reduce the demand for dollars in global trade, and this isn't good for US Treasury demand. Let's not forget how China borrowed billions of dollars at the same rate as the US government itself. It happened a few weeks ago in Saudi Arabia. This is incredible and is another challenge against Trump's economy. $40 billion of demand for just $2 billion worth of bonds. The more China borrows money, the more Trump punishes the world with tariffs, US yields will continue to fly up or at least stay elevated. And this ironically makes it impossible for the return of US manufacturing. Well, it can happen, but on the back of a new fiscal and debt crisis. But let's talk about the next phase of the trade war. Semiconductors are once again the target, and China has thrown a very big punch at the US. China has officially hit the US with an export ban on critical minerals. Beijing is now throwing caution to the wind. They basically have had enough with Washington. China has banned the exports of gallium, germanium, antimony, and other super hard materials to the US. This is going to hurt the US military and weapons production for sure, but the biggest impact will fall on US semiconductor manufacturing. Biden wants to shift chip making back to the US, but what China just did is a big threat to that dream, to that fantasy. Germanium and gallium are two of the most vital minerals for the next generation of advanced chips. They provide better performance, speed, and energy efficiency. If you want to make quicker jets or missiles, you need chips powered by these minerals. China is now weaponizing their supply chains against the US in the technology war. While the US was busy building bases around the world, China has been consolidating their control of minerals of future industries. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SeanFu. Start your gold stacking journey today. And just like how Washington uses the dollar as a stick, Beijing is using their supply chains as a big bargaining chip. And there's simply no alternative here. For germanium, over 50% of imports comes from China. The majority of supply is now gone. And how is the US going to replace this without causing a big surge in price? 5% comes from Russia and the rest from the EU. Even if the US wants all of Europe's supply, it won't be enough. It will drain the world of germanium. For gallium, 20% comes from China, but once again, this is a very significant quantity. It's enough to cause a price shock to US chip industries. Getting supply from Germany or Japan will be possible. The question, however, is a matter of cost. Making chips in the US is already phenomenally high. If you want a tipping point, this is it. TSMC has a plant in Arizona, and to get it operational, the US has given Taiwan Semiconductors a ton of money. We are talking about nearly $12 billion in grants and loans for the chip plants. In addition to this, the company is also building a $10 billion plant in Germany. By banning critical minerals for semiconductors, China is going to raise the cost of production in the Western world, not just in the US but in Europe as well. And this could make the final selling price of chips so high that it damages the potential of exports. The US could be doomed with expensive chips for their own domestic industries. Global semiconductors will still be provided by Taiwan, and in time, China will catch up and take over that as well. This is a result of Biden's chip war. This is the consequence. It won't work, especially when your opponent controls the inputs. It takes decades to build up supply chains, and you can't replace that overnight. The US Geological Survey estimates a hit of $3.4 billion in GDP from the Chinese ban. Now, 3.4 billion sounds like a drop in the ocean. However, this is concentrated mainly in US chip industries. The bigger concern now is China's follow-up, and we have said it many times before, things are just ramping up. Gallium and germanium bans, they are bad enough. Graphite is another important element needed in chips, and without this input, semiconductor production and even lithium batteries would be impossible. And this would cripple the EV industry as well. And guess who has a stranglehold over this critical mineral? Once again, it's China. Chinese companies account for 77% of natural graphite production and nearly 100% of graphite refining. If you want any supply for your industries, you'll be buying from China. There's no escape here. In contrast, the US is in a horrible position. They have less than 1% of the world's graphite reserves. US manufacturing is 100% import reliant. Even if Trump builds out 100 refining plants, natural graphite still has to come from China. And this puts the US at a severe disadvantage in the coming trade war. As powerful as dollar sanctions are, the threat of a supply chain shock is even more terrifying. You can bypass US financial sanctions. Countries can always use alternative currencies. But it's going to be impossible to find alternatives when it comes to minerals and commodities. Changing suppliers is impossible without sending the price soaring. And if you think this is bad enough, China still has more cards to play. They could cripple the future of US EV production. Cobalt is a critical metal for EV production. Around half of global supply is used to make electric cars. Once again, China owns the majority of global supply. By 2030, China will control 46% of global cobalt production, and this is spread across companies in Congo and Indonesia. And if we throw in the rest of BRICS and their partners, cobalt is outside of Western control, over 50%. And this is yet another point of vulnerability that Trump isn't factoring in yet. Besides Tesla, the US is far behind in EVs. China imposing a cobalt ban in addition to graphite will make domestic production impossible. Will see Ford and Tesla continue to manufacture in China? They simply have no choice now. Is Trump going to punish US cars and tariff the local consumer? This is another big question that we have to ask. This is how dangerous the coming trade war is. Sure, the US can use dollar sanctions, interest rates, and tariff to punish BRICS, but it's going to be a losing battle. The future of demand is in the global south. China's pushback is a warning signal to Washington. We can and we will fight back against your sanctions. For the US dollar, this is bad news. Circling back to the reserve currency, Trump he has to choose. He can cut the deficit and bring back US manufacturing to a certain extent. But that will mean losing the power to sanction the world. Plus, less money will circulate back to US assets. So Wall Street will be very unhappy with him. You can't have it all anymore. But let me know what you think. Will Trump really punish BRICS over the dollar? And what is China's next move? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.